Hims and Hers just released their Q1 earnings of 2025. And long story short, this is one of the most amazing earnings I've seen in a while, and it continues to reaffirm my confidence that this company is the Netflix of 2020s. Look at the revenue growth, for example, 22% quarter over quarter, just insane numbers. Look at the net income, in orange again in Q1 of 2025, essentially doubling the Q4 of 2024, which was already amazing. This also leads me to believe that I have to update my modeling going ahead. So the Q2 numbers that I have right now, my estimates for Q2, I will have to essentially almost double them again and probably increase my estimates for Q3 and Q4, and also obviously Q2 2026. So all of this combined is going to make the company look utterly cheap, like at the current valuation. Let's have a quick look on Yahoo Finance and see what the current market cap is. So the current market cap of the company is not even 10 billion. And we can see after hours, it's up roughly 1%. Although it was actually, well, now it's down 1%. And you can see it's been up and down a little bit. But I think once the market digests the actual, like the sheer amount of like goodness in this report. Look at this table here from their own earnings deck. Revenue 111% year over year. Net income 345%. Adjusted EBITDA 182%. Operating cash flow 322%. Free cash flow 321%. Subscriber growth year over year 38%. Monthly online revenue 53%. Like no matter how you dice it, and also looking at their own estimations for 2030, and they're saying like, look at the wording there, revenue of at least 6.5 billion. And again, this company is this company is essentially very, very conservative in my opinion when they come to guidance. So when they say 6.5, but this kind of revenue growth that they're showing, honestly, I wouldn't be surprised if this was already a 10 billion company by 2029, like more than what they actually are saying here and a year earlier. But let's not forget the reality. So let's go back to the actual numbers today. Obviously, subscribers came in a little bit lower, but then looking at the revenue, right? My revenue was 542 million, and the actual revenue came in like 586 million. And you can see, for example, the gross profit, right? I had them at 405 million. They came in at 430 million. You can see that the marketing, I had them at 247 million. The actual numbers are 231, which is amazing. Much, they managed to increase their revenue by 22%, but the marketing went up by 4.6%, which is kind of correct according to my own also thesis that this company is going to rely more and more on the actual name recognition. They are becoming so big and more people are knowing them. And since they are offering such a good service and customer satisfaction is through the roof, I say that their name is going to carry quite a lot of significance and they don't need to spend as much on marketing. So this is amazing to see. Like, I'm a bull on Hims and Hers, but look at the numbers. Like I expected 12% increase in marketing. They did 4.6%. Despite that the revenue came in essentially 50 million higher than I expected. Operating expenditure again came in lower than I expected, despite the revenue again being 20% higher. So this is actually insane. Look at every single line. Look at the net income, essentially double of my numbers. And all this despite knowing that yet again that the marketing is 231 million still, on the basis of a revenue of 586 million. So it's still quite huge marketing expense, right? They could easily slow down a little bit on marketing or even stagnate a little bit. Let the weight of the name, the brand carry a lot of doing the heavy work. And maybe let's say by end of the year, if they have a revenue of 700-800 million, maybe even 900 million a single quarter, this company could easily still get by doing like 250 million in marketing maybe. The operating expenditure could maybe, let's say, hypothetical. Actually, I have actually modeled this out for you. So let's go to my own expected Q4 numbers, right? So in Q4, I expected revenue of 725 million. But knowing that now the actual numbers came at 586, I would say it's probably can push 800, maybe even more. And knowing that I'm already modeling way too much of a marketing expense based on what we actually now got on almost 600 million revenue, right? Even if my marketing is 300 million, the operating expenses is not gonna go up that much. We can see that the income from operations, I'm expecting 75 million, which is again 50% higher than the actual number that we just got. And I would say that based on today's numbers, I'm quite conservative. Wouldn't at all be surprised if Hims and Hers have a essentially income from operations at around 100 million or so, and maybe net income closer to 100 million also. And that is huge. Like, again, that's already in 6 months from now, right? I mean, what are we expecting for next year? Maybe my numbers for next year is also way too conservative. Based on this, I mean, from what I saw today, I wouldn't at all be surprised if they get 1 billion of revenue by Q4 next year. And just doing a quick math here, I think the margins is gonna go up, marketing is gonna go down as percentage of the revenue. I wouldn't be surprised if Hims and Hers does almost 200 million, maybe 150 to 180 million net income by end of next year per quarterly basis. They can potentially have a net income of almost 7 to 800 million already next year in a single year on a company that is currently priced at 9.4 billion market cap. I mean, again, you potentially buying this company on a PE ratio of 9 or 10 for 2026. This is like utterly I don't understand how this company is so cheap. Maybe in a couple of years time we could have them at $150. Let's also not forget some of the more important actual news coming out from the earnings. Hims also mentioned that it's going to pursue international expansion via both organic growth and also mergers and acquisitions, I would say. So it's this is an aggressive company on top of the already extremely good fundamentals, extreme good customer satisfaction, and just a great tech platform and great CEO, and just expanding to more and more verticals. And whilst doing that and whilst having an insane marketing budget, still making money already. How often do you find a company at this kind of low valuations with this kind of insane growth rates and still already being profitable? Compared to one other company that I covered, like Neo, that might one day in the future, 10, 15, or maybe a trillion years from now, being profitable, right? Hims is doing it as we speak. So again, in my opinion, I don't understand why the market is reacting this way. Probably they have said something on the call. I will make a more in detail update tomorrow. But again, look at let's be honest, look at the numbers. How often do you have a company increasing their revenue 22% quarter over quarter on top of essentially 15 to 20% continuous revenue growth quarter over quarter for the longest of times? They didn't update their guidance for Q2 and for the entire year. They're sticking by the actual numbers that they gave us already in Q4 for 2025. But still, I would say that considering everything now, I just don't see how this is a bad earnings. So essentially, that is my coverage of Hims and Hers just quickly after the earnings. It was great in my opinion. I'm not really sure why the market is reacting this way, but it is also, after hours. It's probably, if the market is green entirely tomorrow, I wouldn't be surprised at all if this thing skyrockets to a complete different league. Again, this is not investment advice, but I've rarely seen a company at this kind of performance levels so early into the story. So thanks for your time. Please like and subscribe. It would help me a lot with more subscribers to try to pass these 1,000 subscribers, and see you in the next one.